Frank O'Neill says he took out redundancy cover on a home improvement loan, but when he tried to claim, he couldn't.
They're just a rip-off, really. We've spent all that money on an insurance that really would be no good to me.
Increasing numbers of people in the southeast are complaining that when disaster strikes, their insurance company finds a reason not to pay out. Tonight, First Sight asks why, when it comes to the crunch, insurance companies can turn out to be fair weather friends. Frank O'Neill has worked as a self-employed ceiling fixer all his adult life. Recently, he took out a loan of £14,500 for some improvements to his home. That was 2 years ago. He got the loan via a salesman who worked for a company called Rugby Finance. Anxious to safeguard his family, he also took out an insurance policy to cover the loan. He did this so it would be paid back if he fell sick, had an accident, or found himself out of work.
We did want to do the improvements, so we did apply to one of these loan companies that came through the door, and a broker came out to see us, and he took down all our particulars and everything, and my husband had to prove that he was self-employed in all his accounts.
As the season of good cheer and charity ended, the family faced an uncertain future. With the recession, Frank's work had dried up. However, they felt safe because of the policy they'd taken out to cover the loan. But when they tried to claim, the insurance company said the small print excluded them.
They turned around and said we weren't covered because he was self-employed. But they knew that when we took out the loan. But when we went to make the claim, they said, unfortunately, you're not covered.
The O'Neills claim that the broker misled them when he sold them the policy. When they actually looked at the terms of their insurance, they discovered they were not in fact covered. The O'Neills say that a clause in the small print excluding the self-employed was never pointed out to them. What's in dispute in this case, as in so many others in the southeast, is what the broker said to the O'Neills. First Sight tried to contact the broker, who worked for a company called Rugby Finance. Unfortunately, that company has gone into liquidation, and we were unable to contact him. In the meantime, their loan and interest on the arrears has now escalated to more than £17,000. And what's even worse is the O'Neills face possible repossession of their home, because the loan was secured against the value of their house. They now regret having taken out the loan, and they feel their home is no longer their castle.
It's been awful, really, because the threat of losing the house, even though it's not a mansion or anything, but it's just our home. And the thought of that, it's been very hard. I mean, I suppose it even came to a point where we were arguing so much between ourselves.
The family have turned to the housing charity Shelter to sort out their problems. With Shelter's help, they've won a 6-month delay on repossession, and they've negotiated reduced repayments on their loan. Shelter's Helen Van Cliff sees more of these cases as the recession bites deeper, and people claim on their redundancy insurance.
He was a self-employed man, and the insurance covered people for redundancy. Now, the issue about the word redundancy in the small print of his particular insurance was that redundancy meant you had to be in employment, you had to be employed. Now, as a self-employed person, you employ yourself, so you're not employed, that's the term. So he could never fall out of employment, and therefore he could never have claimed under that insurance right from the very beginning. Now, he actually relied on a broker and said to the broker at the time, am I covered? I'm a self-employed person. The broker said, yes, don't worry. He relied on that statement. He didn't read the small print, and to his cost, he found out he was not covered.
Experts like Helen Van Cliff say the small print in these policies is a minefield, and people should beware.
In my experience, I've only met one person who has actually claimed successfully under their mortgage protection and got their mortgage paid for a year. Now, that sounds quite good, but if you compare that to all the others that we've met who have had no protection whatsoever despite having paid for that insurance, then I think they're a complete waste of money.
You need to be very careful with insurance because it's full of jargon, exclusion clauses and all sorts of small print that can cause all sorts of problems. People, by and large, cannot be bothered, quite understandably, to read through their policies when they buy them. So it's only when they come to claim that they suddenly discover that they haven't bought the sort of cover that they thought they were buying. If the broker did not make absolutely clear to the person that they were not getting unemployment cover, then he failed in his duty, and the customer should have a clear right of redress there to have either his insurance premiums repaid, or ideally he should have his claim paid.
It's like living in limbo. You go from one court case waiting for the next one.
Yeah, there came a point where it was make and seal, keep worrying about it, but no. We sort of said, well, we don't feel we've done anything criminal, so we don't feel that we should be, well, treated the way we've been treated, really.
Here at the Aegis' home in North London, they've also had trouble claiming on an insurance policy. They've lived here for more than 20 years. Recently, they've been plagued by condensation, damp, and the consequent deteriorating fabric of their house. They've been doing battle with their insurance company. Their problem began under the floorboards. This lake of water under their house is more than a foot deep. No one knows where the water is coming from, and at first the insurance company refused to pay for an investigation.
I think the insurance company have behaved outrageously in this case. The fact is that the Aegises have been suffering now for 18 months. Their health has suffered extremely badly, and it's going to cost the insurance company at the end of the day considerably more than it would have done had they involved themselves in investigations at an early stage and paid out for those investigations.
The water board have pumped the water out 3 times, but each time it just returns. Now the couple have employed Stephen Newman, a loss assessor, to help fight their claim.
Hello, Claude. Good afternoon. How are you?
Fine, thank you.
To find out where the water is coming from requires an expensive investigation.
Yes, I'm afraid the water does not appear to have subsided at all, does it?
The company, the Zurich, pointed to the small print. Zurich said although they were covered for flood, this was not a flood, and that unless they could prove the water came from an escape of water from fixed tanks, apparatus or pipes, they were not covered. First, they were told that Zurich would pay for an investigation. Then this offer was withdrawn. It was catch-22. No investigation, no claim, no claim, no money for an investigation.
They take your money quite quickly, but when it comes to helping you, they just don't want to know, or they just try to pass the buck onto somebody else.
Well, they've been unsympathetic. I mean, they're running a business, we understand that, but they've been unsympathetic and unhelpful.
I was very, very angry, but now I'm just totally exhausted with it all.
Since First Sight looked into this case, Zurich have now offered to make an ex gratia payment towards an investigation, beyond the scope of the policy. They've also agreed to pay for damage to the fabric of the house. The Aegises are not alone. Increasingly, insurance companies are scrutinising claims very thoroughly. Small print and exclusion clauses are cited as reasons for the companies not to pay up. It's a trend hitting all sorts of insurance claims.
They have taken a much tougher approach to claims, and that has translated in considerable toughening of attitude and an unwillingness to pay out either quickly or to the extent that they perhaps might formerly have done. Some of our clients come to us because they believe they are being treated unfairly by their insurance companies, and they're finding that they're not either being paid out to the full extent that they should be, or they're not being paid out at all, with the insurers repudiating liability on perhaps sometimes spurious technicalities.
So why is the insurance industry clamping down so hard on the policyholder? Well, it's trying to recoup some of its losses. In 1991, it made a £3.3 billion trading deficit. And one of the major areas to hit profits is fraud. Arson is one of the biggest areas of fraud. It's a major concern of the insurance companies. Here at Acton Fire Station, they're answering another emergency call. 22% of fires are known to be started deliberately, but evidence of starting a fire on purpose doesn't necessarily mean it's fraud. Arson fraud is costing the insurance business £100 million a year. So concerned are insurance companies that they now joint fund the Arson Protection Bureau to tackle the problem. Deliberate fires have gone up from under 700 in 1961 to more than 23,000 in 1990.
There's been an increase in arson for various purposes. I mean, children start fires, disappointed lovers start fires, disgruntled employees. But there has been a very noticeable increase in the number of arson fires committed for fraudulent purposes. It's gone up from what we thought was about 10% of all arson to 20% or more of all arson. We've got the businessmen who see a fire as a way out of a temporary cash flow problem. We have the householder with mortgage problems who sees a fire as a way out of his or her difficulties.
The fire scene that we're about to have a look at is a scene of a fire which occurred a couple of days ago in the early hours of the morning. It was one of the larger fires. It required the attendance of 4 appliances.
Acton Fire Brigade have one of only 2 dedicated fire investigation teams in Britain. Their job is to prevent fires and detect how fires are started. Teams are now trained to look for signs of fires started deliberately, and the detection rate in recent years has soared. In 99.5% of cases, fire crews discover the cause of the blaze and pass information onto the police and insurance companies. Once a fire dies down, the investigation team is sent in to look for clues.
It's gone at a low level all the way across, right down to the bottom of the architrave. In fact,
what's interesting about this particular fire scene is that there doesn't seem to be a particular place where it started. The char produced by a smouldering fire is distinctly different to the char produced by free burning or rapidly developing fire. And in this instance, we're looking at the type of char which is produced by a rapidly developing fire. So this fire went fast.
We've got uniform low burn patterns all the way around, which might indicate that we've had a flammable liquid or a liquefiable solid in here.
The Acton Fire Brigade station answer around 500 calls a year and have pioneered liaison with the police and the insurance industry, who increasingly use their expertise.
It's also true to say that whereas people might believe that arson destroys all the evidence, it actually creates evidence as well. And we're getting a lot more professional at discovering that evidence.
New technology is also helping in the fight against fraud. Legal & General is one of the first insurance businesses to hire a specialised company to detect fraud. Innovations like this machine, which discovers alterations in documents, will benefit the genuine claimant.
This particular document has recently come to light, and again, it didn't appear to be particularly suspicious, but there was something unsatisfactory about the claim. It's meant to be a receipt for some property that's been purchased. Until analysed, we then find that the pound sign and the 250 have been written in one ink, and the one in front of the 2 is written in a highly luminescent ink. 2 different inks have been used.
This ESDA test brings out hidden written impressions. A sample receipt for a video recorder, which was supposed to be purchased 2 years earlier, is revealed to have been written at the same time as the claim for its replacement.
In fact, at the end of the day, it's not the insurance company that actually pays, because the common fund, which insurance companies operate for the benefit of their policyholders, means that the loss this year is actually paid for by the policyholders next year. In fact, you could actually suggest that one man's fraudulent claim is his next-door neighbour's premium increase.
The genuine claimant has absolutely nothing to fear. The good point for the genuine claimant is that they will actually pay less for their insurance if we can stamp out the fraud.
Those working in the insurance business worry that the number of bogus claims has risen dramatically. But loss assessor Stephen Newman says in the insurer's zeal to tackle fraud, they're penalising the genuine claimant.
Most of the claims with which we deal are perfectly genuine, straightforward and honest, and have not been presented on an inflated basis or a fraudulent basis. I believe that a number of claims which should be paid without difficulty are being unpaid or going unpaid for either a long period of time or not at all at the end of the day.
The storms of 1987 and 1990, which caused devastation in the southeast, are another reason why the insurance industry is facing such severe losses. A series of disasters left the insurance business with a record worldwide trading deficit. Unforeseen calamities like the drought cost the insurers £540 million in subsidence claims in 1991. domestic claims shot up by 62%. And claims as a result of car crime rose too by 36%. The Association of British Insurers say the unprecedented losses in the same year meant that for every pound of business bought, they were paying out £1.30, and this is why they're now toughening up their attitude.
We had a series of misfortunes. You'll remember the great storm of October '87. This was followed by the very big storms in January and February 1990. Then we had the Piper Alpha oil rig. We've had earthquakes across the world, enormous strains on insurance capacity worldwide. In the UK in particular, some of the companies have been badly hit by the domestic mortgage indemnity business losses. The recession has cut deep.
The insurance business is based on calculated risks. Underwriters estimate the likelihood of an accident or incident happening based on the previous number of claims. Then they establish a premium. For instance, historically, there has only been one storm the size of the 1987 hurricane in 300 years. So the insurance underwriters got caught out when another storm occurred 3 years later, causing a deluge of claims. To cope with the losses, insurance companies are not only getting tougher on paying out in some areas of London, they are also raising premiums. Even insurance broker Gavin Lehman's home contents insurance has risen more than 100% despite heavy security.
I opened the envelope and my eyes, were staring in disbelief. I mean, it really had gone up. It was like it was over double. And at first I thought, no, this can't be right. And I made a few phone calls with other companies, and it was the right sort of figure. And even when I rang up with the insurance company, my insurance company, they said, well, shall we cancel your direct debit mandate? Because they knew it had gone up and they didn't think I would actually pay it.
Every policyholder knows that higher premiums are the response to disasters and an increase in claims. Few policyholders are going to object to a clampdown on fraud, especially if it means lower policy prices in future years. But what many fear is that they're paying for the mistakes and the misjudgments of those working in the insurance industry. Offering redundancy cover in a recession at the time of rising unemployment was bad judgment by the insurance industry. Another bad bet was to take on mortgage indemnity business just before house prices collapsed. Mortgage indemnity involves insuring a lender against a property going down in value. In 1991, insurers set aside £1,125 million in anticipation of such losses. In 1992, they set aside £750 million.
I think one of the things that insurance companies did in their efforts to try and expand using the capital they had in the mid-80s was underwriting insurance that, in retrospect, they shouldn't have underwritten. Mortgage indemnity is quite a good case in point. To insure people against their house going down in value, effectively. Now that's the kind of insurance where you're either going to have a few claims or millions. Redundancy insurance is another example. You're going to either have a few claims, or if the economy turns down, you're going to have millions. And now they're looking at a deluge of claims. They're looking at their balance sheets shot to pieces.
The insurer's response to this problem is to pull out of risky business or raise premiums dramatically. The consequences can be seen here in the East End. The East End is one area where traditionally it has been difficult to get insurance, often referred to jokingly as the Bermuda Triangle by insurers because so much goes missing here. With the industry under severe pressure, many businesses are finding it difficult to get insurance. Malcolm Eve works for one of the few companies who try to find insurance for traders in the East End.
Most insurance companies, if you approach them to underwrite a risk in this area, would just automatically say no. It wouldn't be a question of we want a certain premium and that premium not being acceptable. As I say, they would automatically say we don't want to know. Fortunately, it's still possible to get insurance in this area, largely thanks to certain Lloyd's underwriters and one or two other underwriters in the London market. Cover is still available. Now the premium may be high, but at least the cover can be obtained.
For those who do have insurance, there is a high cost in terms of both the premiums and security measures. Many traders trying to work here say the high price of insurance is forcing some people out of business.
And we are going to out of business, and I don't know who will...
Locals in the rag trade and restaurant business in the East End gather to discuss their problems. The owner of this Indian restaurant says he can't afford a policy to cover live music, and it adversely affects his custom.
I inquiring about the insurance company, the live music things, and they give the very high premium, what I can't afford. So because of the insurance problem, I couldn't provide this kind of music for my customer, what will be helpful for my business.
Majority businessmen can't afford to pay high premium or get the insurance done for their shop. Therefore, there are several problems. A, that they can keep enough stock. B, they can meet the requirement of the customers. Therefore, C, they cannot expand their businesses.
One bomb went off in a vehicle parked outside a row of banks in the St Mary Axe area of the city.
Terrorism in the capital and the southeast is another area where insurance companies have decided it's unprofitable and want to quit offering cover. The terrorist bomb at the Baltic Exchange in London last April brought home the potential cost of terrorism to London. Estimates run at 800 million for repairs. The cost of the devastation sent shockwaves through the city. The estimated repair bill for the Baltic Exchange and surrounding buildings is more than the cost of all the damage in Northern Ireland since 1968.
It ripped through the front of our building, killing 3 people, injuring another 100. The whole facade has come away, and we've got now something like a £30 million renovation bill, because this is a grade 2 star listed building. Inside the trading floor, there's real devastation here. We've got a listed building with marble, hand-painted glass domes, stained glass memorial window, and all that's been ripped out by the blast.
Even for major institutions, getting your insurance company to pay up quickly isn't always easy.
Well, it does seem to me that insurance is something of a one-way street. You pay your premium, but when it comes to making a claim, you have to fight it every inch of the way. And we've certainly had very long, protracted and difficult negotiations, which we've had to employ professional advisors to help us with over a period of 6 or 7 months.
Following further attacks, the insurance industry announced they couldn't find cover for terrorism on the international markets. It's another example of the industry rejecting unprofitable business. Even after government intervention, alarm bells rang through the city, the financial powerhouse of Britain playing host to more than 500 foreign banks, the headquarters of the securities and the banking industry. The Corporation of London owns a large property portfolio in the city. It worried that if only expensive insurance cover for terrorist attacks was available, institutions would quit Britain to set up in Europe.
We're trying to promote the City of London as a world-class financial centre. We intend to set about attracting new business here because we do have vacant commercial office space and we want to fill it. And anything which suggests to foreign investors that London is an expensive place to set up business is not helpful to us. And therefore, insurance costs are a factor in everybody's occupation costs. And if it doubles or nearly doubles, then obviously that's an adverse factor. For that reason, we decided to make the point very strongly to the government that, first of all, they needed to come in with a safety net so that buildings could be covered.
The solution has been that the government has agreed to act as the reinsurer of last resort and to stand behind the insurance companies in providing the cover necessary for the terrorism risk.
Critics say in the case of terrorism, the government, or rather the taxpayer, bailed out the insurance industry. One more example of the public having to foot the bill. Aren't policyholders just bearing the brunt of the mistakes the insurance industry has made?
Bad judgment is very easy to establish with hindsight. Policyholders' premiums were far too low, and in fact they were getting extraordinarily good value for their insurance, and the competition made sure that that was the case. So to the extent that they're now paying higher premiums, this means in fact that they are paying correct premiums for the risk which is now being calculated. I think that's entirely fair.
What disappoints Claude Aegis and other critics is that the industry regulates itself, but the Association of British Insurers remains adamant it's the right approach. So you think there's nothing wrong with the insurance industry at the moment?
Nothing wrong with the insurance industry which it is not putting right by its own efforts.
The standards laid down by the industry are excellent and we support them. The problem is that they are not upheld. There is no monitoring of these standards. There's very little regulation of the industry and checking that these standards are being maintained. If the insurance industry spent as much time making sure they were selling the right policy to people as they do trying to contest claims, there'd be a lot less problems with insurance.
Faced with the likelihood of high premiums and the possibility of no payout, some people are drawing their own conclusions and not taking out any insurance at all. But that has its own risks. Mohammed Rahman started his small grocery and newsagent's business in April last year. He doesn't have cover for theft. He says it would cost too much at around £800. In addition, the insurance company insists on the installation of new security measures, which he says would cost him £5,000. He's already been attacked and robbed at knife point, and he's worried another attack may put him out of business.
I feel very unsecure because I can't sleep because I am all times I am thinking about my shop. Maybe anything happened.
Richard Cohen, who works for Hackney Task Force, has carried out a survey here, which has revealed that 20% of businesses haven't got insurance. This has severe consequences on the prosperity of the area, especially in attracting new business and employment.
For businesses in this area of Hackney, life is difficult anyway, and particularly in the middle of a recession. Insurance premiums, among other things, may affect the profitability of that business and may affect whether they stay in the area or start up even in the area.
Would you take out an insurance policy again now?
Never. Don't take out anything. I wouldn't even buy another house. Never again. It's not worth it.
If it continues to rise at the rate it has been, it will become a luxury product like it started many years ago, and people won't be able to afford it. So yes, I can see people gradually dropping off, and only those that can afford it will have it.
This nuts and bolts workshop illustrates what can happen without insurance. It has been completely destroyed. Its owner has lost his entire business. Insurance cover proved too expensive when the workshop started up. The insurance company required expensive security measures to be installed before issuing a policy.
When I first walked in and saw it, I cried. I was gutted. You can see 5 years gone up in smoke. Your future gone, everything. Just didn't know what to do at the time.
Any idea who would have done it?
Well, believe kids, yobs, or whatever. We don't know.
But you still couldn't go for any insurance?
No. Not when the first burglary happened 3 months ago. I mean, we were right down on our luck. We had no money at all. I mean, it was just financially not viable at all. Just didn't have the money.
So the policyholder is left with a difficult dilemma, taking out no insurance at all, which may mean ruin, or having to pay high premiums and risk a claim being thrown out. In the meantime, the insurance industry is likely to be regarded by increasing numbers as a fair weather friend. If you want to discuss the issues raised in tonight's First Sight, ring your BBC local radio station tomorrow morning. In London, call GLR on 071 224 2000 from 10 a.m. In Kent, call BBC Radio Kent on 0634 811111 from 11:30 a.m. In Oxford, phone BBC Radio Oxford on 0865 311111 after 10:30.